Okay, hi there traders. I'm just getting myself organised. Just got to quickly type something up and then we'll get straight into it. Hope we're all well. Okay, g'day Pete. Just watching this thing, see if it actually ticks through the lows. So if anyone was watching the 5 minute breakout, it didn't work. Well, it didn't trigger really on the open. It's had the candle prior to the open. It took out the high, so it made new highs. So you don't really want to be buying breakouts through there because it's just a flush mechanism, just trying to, if you're going to buy that high when there's no stops above there because it's into new highs, it's not what you want to do. So let's see if this may be the lows. I mean, you're not going to give the low a go for the next few minutes and then maybe just leave it a miss. Hang Seng hasn't been as nice as it has lately. The Dow's been going well, and the DAX has been probably 50-50. So it's been okay, but it's a little less volatile. But when it kicks off, you just watch. It'll start kicking off pretty hard, I would expect. Now, am I coming through okay? I am. I'm assuming I'm coming through okay. Yep. Now let's just minimize. We'll close that down. We'll get onto the market. So bit of a catchy headline. Market meltdown. Now I don't, whether or not it is, we're going to have a bit of a sell-off or not. It's a different story. The markets will look relatively tentative. Well, when I was writing this, actually, to be honest, it was looking a little more tentative than it is now. You got the SPY, which is looking like it potentially rolling over, showing some weakness. But for now, it's actually bounced. So it's just squeezed on some of the sellers from the open, and I'm not sure what it's doing right now. But yeah, it's let's just look at the ASX. Here we go. I'm just looking at the intraday stuff, really. Oh, it's rolling over a bit. Is the 5 minute. It's sort of, you can see this sort of selling on the open, sat around here and then popped up just to squeeze some sellers out and then potentially rolling again. So we'll go through that. We'll just go through a few other bits and pieces on the index itself and then see what's happening in the Dow, what could be there, what could be on the S&P. It's Europe is, I think, the key problem at the moment. Whether the other markets brush it aside, it's just a bit of fear. A bit of, I would suggest, a bit of risk off as well on Friday night into the weekend on the news that there's more lockdowns in Europe. ECB, that means they were talking up no rate rises again. Just having the watching the Hang Seng, it's just traded through the lows. We'll see if this can kick on a few more points, and then it's it needs a few more points, but it's again they've been flushing the lows and bouncing back, flushing the highs, bouncing back. So it's just going to need to push on from here. All right, let's get into the overall markets now. I'll put the ASX up on trading view. Bit of weakness coming through the Hang Seng. So whether there's a bit of follow through or not. Yeah, so they're just chopping around. So the markets lately, because everything at the moment, to me, everything's just playing around at the moment because we've got Feds supporting the market. They're not turning off, support. Rate rises are sort of off the cards. Markets not willing to go down. They have been going down in the past, and they've been crucified if you're short, squeezed out. So the markets on the open are just searching out liquidity. Really, there's no real direction because no one quite knows what to expect on the open. It could flush higher, and it's the algos which are driving markets a lot lately. And the driving opens, they're just chopping the market around because fearful traders will look at a bit of a push down and sell into it and then get squeezed back out, and bulls will get, jump in saying, it's just another buy the dip, and they get squeezed out too on the open. So the markets can be very choppy on the open and very sort of, I'm feeling lacking a little bit of volatility too. And it could be, so the ASX, you expect a bit of weakness on the open, a bit of weakness, and then turn around and squeeze everyone back out again. So there's a lot of traps, a lot of setups, a lot of things like that happening, and algos are the ones driving it. It's not, your bigger traders, they can't do that. They're not quick enough. It's sort of algos taking liquidity from the market, just chopping around to, you take a few points, scalping out here and there, which is just leaving the market a bit less volatile because people are slowly just, I feel, staying out because it's choppy. I mean, if you're a raging bull, yeah, that's fine. You'll just be loaded to the long. But if you're thinking about jumping in, the market's not doing anything, you're not going to throw too much risk at the market. It's not really worth it because we're sort of, the US is stretched, there's no doubt about it. On Friday night, when they were talking about up more lockdowns in Europe, the market got sold. It was weak on the open, so it was back to the, what is it trade called again? The Dow got smacked, and it's just the stay-at-home trade. That's what they're calling it. So the stay-at-home trade is just, your tech and stuff. So NASDAQ was up from the open because Europe had already been sold off, prior. Got hit prior, and everyone knew sort of what was driving that. So tech bounced up in the open, Dow was straight down in the open, and then S&P obviously with 500 stocks have been buoyed by four or five stocks. So as long as those 4 or 5 stocks keep getting supported, the other, I don't know, hundreds and hundreds of stocks on the New York Stock Exchange could be going down, yet the indices are still going up. They're still getting supported, and ETFs are, algo ETFs are driving the markets as well because they're just buying stocks that are probably, because of what's happening, if there's the indexes are going up, they've got to sweep the market constantly. So there's all this sort of stuff happening, which is not, I think trading as such, it's a bit of a mess. So I will see how it all goes. But anyway, I'll take a look at the ASX. I want to start with, this is a Hang Seng. We'll get onto a daily chart. So I just want to look at some key levels. You can see, I'll draw it up. I'll start from fresh. So at the moment, the ASX, I mean, it could go sideways from here, and it's done that before. It's gone sideways, flushed, and gone again. So, for whatever reason, the Aussie's coming off, which is probably good, I'd assume, for ASX because it makes any exports, which are a major exporter, cheaper to buy. So it's better for your commodity stocks and stuff. But as the US dollar goes higher, commodities are also getting a bit cheaper as well. So in Aussie dollars terms, they should be getting cheaper because our Aussie dollars heading south. So that could be a bit of a support mechanism for the ASX. But it's this is kind of what I'm looking at on the ASX. It's kind of at a bit of a impasse, I would say. You can see we've got on the MACD, so that's your momentum to the upside again. These two stages here, we made this high, catch off there, this high here. Momentum's easing the whole time. This is potentially the first time which it's easing, but we're still easing on momentum, but we're at a lower high. Whereas before, every time we sort of ticked up, we're still relatively strong, making new highs, but new highs all the way up. Now we've had this big sell-off, and the thing is, we've pushed below that zone through here, you can see, which is somewhere around 72.15. Push through that. That's sweeping out the anchor to the uptrend. That's the anchor to the uptrend. We've got it, prior to that, anchors here, and then here, pushing new highs, come all the way back down. So that's the first time we've had a deep correction. So when I'm talking anchors, I mean, anyone that's been listening for a while knows what I'm talking about. That's your trend up. It's the higher high, the Dow theory, whatever you want to say. So generally, when you get your anchors, and it's a strong trend, you get 1/3 retracement, roughly. A strong trend, the weaker the trend, excuse me, the bigger the retracement. So I'm looking at 1/3 to 2/3. Okay, retracement of this leg up, 1/3 to 2/3. Strong trend continues on up. When it's a weaker trend, it's running out of steam. what's happening is less buyers are standing in the way and more sellers coming in. So each time it gets higher, you can just understand things are rolling over, rolling over. So the higher it goes, if you're not already long, you're probably tentative or you're going to stay out or you're getting a bit aggressive. But either way, the higher it goes, excuse me, just one sec. Oh, just drinking my coffee, get a bit of a frog in the throat there. So the higher it goes, the more energy it's using up. Okay, the more it's pressing up, the more it's using that fuel. It's potentially on the sidelines to go out. But what it's also doing, the higher it goes up, if you're long from right down here, for instance, the higher it goes, the more antsy you'll get to take a profit. And that's how all markets work, in my opinion. They trend higher, and then the higher they go, the more people want to feel compelled to take some risk off the table. And I think that's what the stage we're at the moment. And when we have these deeper pullbacks, that's because there's probably less buyers in the way and more sellers thinking this could be the time we're rolling over. And the fact that we've got through here, if it was a strong market, we should have kept going. This leg up shouldn't have pulled back fully. So that's your leg up. That's your leg all the way back down. So it's gave up. Anyone that bought it there was underwater at some stage. Potentially still underwater now. Some will still be underwater now or in negative territory. Some won't be. It just depends where you bought it. If you're trading this, just say that's the whatever it is, that's the XJO. But if you're trading it outright, if you're buying stocks when it's up here, you're potentially underwater, depending on what stock, obviously. But that's the ASX. So we're looking at this as a whole, top 200 stocks. So if you start to now, we start to bang around here. To me, that's a bit tentative. Where I'm thinking we could be getting a lower high, and I'm looking at it purely because it's getting soaked up, and elbows will be chopping it around. But if this turns out to be a lower high, and people start to look at that saying, okay, we're running out of momentum to the downside, don't forget, to the upside, don't forget. And you look at it too with MACD. I'm looking at MACD with respect to momentum. It was around the zero line. Each time it bounced, this time around it went straight through. So there was more selling momentum. You can see that. It's clear. Okay, and that's clear because the market pushed right back down to this high low, to the anchor to the uptrend, which it shouldn't do if it's a strong trend. So you put all this data together, then we get the next move up, it's weaker. So the next move up, it's weaker again than the previous couple of moves up, which made to new highs, and we can't get back up to new highs. So to me, the ASX is struggling at this stage. It's a bit rangy at the moment, but it's struggling to get back up to these highs at 76.44. Okay, and we're down a couple of hundred points. Yeah, nearly 300 points, isn't it? Off the highs. So all I'm really doing is looking at this stage, looking at what where we're at the moment. I mean, we could range bound, you could range into the market, just off we go again. As the US said, we're not going to raise rates. We're going to throw more money at the market. We're not going to provide stimulus to the Fed. They keep buying everything up, raising the debt ceiling. Same old story. If it goes into a pandemic, if we start to go into more lockdowns again, there could be the fact that they do that. They don't, bonds. The Fed don't ease off buying bonds, and it's a bit of the same. So everyone's going to be looked back to what happened last time when that situation was in place, and same within Europe. Looking at that situation in place, going, well, last time they did that, bond buying support, kept interest rate low, and then we could be pushing higher again. So I think there could be, if there's more lockdowns coming in place in Europe and everything, then the markets could get knocked around initially, but probably what will happen to be, the same old thing as what happened last time. Okay, people won't let it get down as low. There'd be some buying because they're going to say, well, the Fed's going to keep throwing money at the market, keep supporting it. They're just going to turn on the tap again. ECB kept their taps on. RBA, all the Fed reserves will go, we don't want it to go down. We're just going to do the same old thing we've done before. Keep those taps running, keep that support going, keep interest rates really low for a lot longer than everyone expects. And then what are you going to do with your cash? You've got to chuck it in the market. It's as simple as that. Super funds, everyone, all that sort of stuff, got to keep throwing money at the market. They only trade shares, basically. The majority anyway, they only trade shares. But in Australia, 9% a month going to the market, 10% a month going into the market. What are they going to do? They have to put it in the market. So to me, if that's the case, then everyone's going to be looking at that, and then you probably get the market's going to be buoyed again. But for now, it depends. If it's not a pandemic, I think what we're showing now, I don't think there's going to be too much flow over into the US. It'll depend. I think we're still a bit heavy at the moment, and a bit of risk is coming out of the market. Okay, go look at the Dow. Actually, I'm just going to go back. Let me go back to the XJO. So this is what I was looking at this morning. Whether or not that's still playing out or not, it's a different story. So this consolidation through here, you know it's going to open weak. That to me could be a lower high. I know we bounced back a bit. We've had this big, sort of flush down, bounce back. All the algos are buying off the lows. ETFs buying it off the lows. People sweeping, buying the dip again, because we've been trained to do that the last couple of years. Buy the dip because you're going to get rewarded. Even if it looks negative, the news is negative. You buy the dip, you're rewarded. Shorts are squeezed. The market playing out the same thing over and over again. So this could be, again, that mentality where it's bouncing off that bottom, but it doesn't mean that this is the time. Okay, you throw your money at the market again and let's watch it bounce. This could be another sell-off. Okay, and that's from that daily we we're just explaining. This big pullback here, as the momentum lifts up again, we're struggling. We're struggling at a lower level, which generally when you're struggling at a lower level after you've broken down through that anchor and you flush the anchor, it means a lower high. To me, that's what it means. So if that's the case, then we're going to head south. And where we're going to go to, we could be, if we just measure this out, it could be a case of, we're going to crack back down around the 7,000 mark. Now, it just depends. I think if the market gets sold off, it's going to be a fear-based selling. So it's kind of hard to measure where you could go to, because when fear's in control and people want out, they don't care and they smash the market. Okay, and it's just the same sort of thing. The market can be rational on the way up and irrational on the way down. You get these irrational moves, and it can be same sometimes on the upside. Look at Bitcoin and other bits and pieces. Rational moves happen all the time. So we'll just have to see. Go to Europe, Dow. So this is the S&P. Let's just look at the Dow and the Nasdaq. It's kind of worthless looking at the S&P sometimes because it is based around the Nasdaq, essentially. That Dow is looking heavy. Go into the daily. So you've had this big move up, and now we've sort of been ranging. We've sort of been grinding our way up, which it'd be interesting to see whether that continues. What's that there? Okay, we're kind of, I'm not, to be honest, I don't like it that much. We're a bit heavy up here, but like anything, it could keep popping up. It could keep popping up, pushed up into Christmas. And again, when it comes down to it, what we fell over on Friday a bit, or the Dow did fell out on Friday because of this pandemic or the lockdowns in the UK, in Europe, getting a bit nervous and profits coming out of the market. People taking just a bit of risk off. Whether that continues or they turn around tonight, it might ease off tonight, and then they turn around and say, well, rates aren't going up. The same sort of wind in the sails is there in the way of Fed support, tapering. Tapering is going to be a slow prospect. They might even take the foot off tapering for now if the market looks like it's going to melt down, just to make sure that support's still there, and they want to keep it ticking higher. So we'll see. That Dow still in an uptrend. You got the current anchor to the trend up is down here. You can see that support quite clearly. It's pushed in here, held this high lows, prime high low just in here, held, pushed up into the top end of that range or that channel, and we're rolling over now. It's just whether we bounce off the MAs, we might find support. It might be down here, you don't know. But at the moment, I don't like to look at the ASX as much as anything else. I think this Dow, the Dow's got the nature of the ASX has got three ways. Sometimes it's got two ways. It's either sideways or down. It's very tentative to go up, whereas the US can go up easy and go down easy. It doesn't like to stay trading sideways in the US. This market's a little bit different, I feel, so it can roll over quite quickly, and it could be quite savage. So you've got to be careful. Look at back in the pandemic sell-off. It was looking okay, and it just went bang straight down, sort of not out of the blue as such, but news started kicking off. It gapped down and just kept going. So we weren't given the lower high to play from. Where you would expect something like this maybe to play out, it could just drive straight down with no looking back. And what that does is create that selling frenzy. As markets realize there's no pullback, they're getting more and more underwater. People are getting more and more underwater. And as the news starts beating that drum of the sell-off or wiping this much off the market, people could just pile in and start smashing that market. Whereas the ASX, I think it tends to go sideways a lot and give you a bit of a heads up, which this is what it could be. Okay, we could be getting that heads up now. Just to be careful, I wouldn't be adding risk to this market at the moment as long as we stay within that range, because to me it's an each way bet. Or if you just look at it that way, are we going up? Are we going down? At the moment, I'm sort of leaning to the downside because of the price action, but I could be wrong completely. So I'm not going to add risk to the market, obviously, until we start to trade into highs, because what that does is everyone's thinking bearish, and the market starts, you get these indicators rolling over, everything's rolling over, the market actually goes sideways and starts to lift again. Everyone who was a bear maybe got out, took some risk off the table, is be getting back in because they realize they're wrong and it's going to go higher. And that's where you want to get on board, when people realize they're on the wrong side, or, like I said, you either short the market, you're going to get squeezed on the rally, took some risk off the table and you realize you're wrong, you have to jump back in. But either way, that momentum will be up to the upside. At the moment, it's kind of sideways. If it starts to roll through the bottom here, there might be a few bulls be sitting there thinking, yeah, we've got a bit of pressure. So that's different price action to me than what we're seeing on the Dow. NASDAQ, yeah, we're back in the new all-time high, so that's obviously going up. Look at the DAX. DAX is still into new all-time highs. It didn't trade new all-time highs Friday, obviously. It's getting a bit extended. You can see the momentum starting to roll, but it's not in a downtrend. It's still in an uptrend. Okay, so that one we've got to keep an eye on. There's a bit like Dow, major support through it, say 15,000. It's 1,000 points away at the moment. So the DAX could easily roll over, flush it through traders, hold a high low, and then go again 500 points from here. Okay, the UK, the FTSE is coming off the highs. It's not all-time highs. We've got all-time highs a long way away, but it has been a nice steady uptrend. Same sort of thing, flushing low, holding and going again. So we're in a leg up at the moment, and we're just coming off those highs. Whether it continues or not, but I just think that news, if they start beating the drum of these news with what's happening in Europe, and we start getting a bit more, because the US, go and look at a chart. I'll just go and look at the NASDAQ, for instance. Look at the chart. It'll go down to we squash it up a bit. That's in a really strong uptrend. Okay, it's strong, but it's extended. There's no question about that being extended. So if you get people that start to maybe wanting to take risk off the table because they're watching the news and going, look, I'm happy with what I've got at the moment, then it can slowly turn and roll, and it could be happening pretty quickly. So either way, we've got to know where our risk is. We've got to know what we're looking for. If you go and look at other things like US dollar, okay, US dollar pressing higher. So that's saying, to me, higher rates, more positive market. So that the higher that goes, it's kind of putting pressure onto rate rises. And whether the Fed says no, sooner or later it could be putting pressure, because if everything comes in line for them with regards to employment and stuff, they're sort of forced into the corner. They can say we don't expect it to there, but that's running off their models. Now, if their models are showing, they're going off their models based on inflation easing, and it's not easing, their end date, their sort of due date for a rate rise is coming forward each time. So that's what I'm looking at there, and it's more of, what's the story with their payroll numbers, which is employment data. It's once a month on the first Friday of the month for the previous month. So it'll be in a couple of weeks, I think. Yeah, 2 weeks from a week from this Friday. What's happening with the employment rate, all that sort of stuff in the US, and the US dollar showing that because they think it's going up. We're talking up rate rises. You look at bonds at the moment. Bonds, that's when they're going down, yields are going up. So if bonds are heading south, they're expecting yields to go up, and they're expecting essentially rate rises. Now, there's always been talk where real yields and all you can go by is really the bond market and what's happening with the US dollar, and currencies are getting knocked around a bit. Euro was sold down because of the pandemic. Obviously, if you're going back into lockdown, you can forget about rate rise, and the ECB have already said that. The market sort of was chopping around, was getting a bit weighty, and as soon as they had more countries going into lockdown, okay, forget about the ECB tapering, okay, and a weaker euro as a result, obviously, and that gave a bit of a lift to the US dollar, but I think the US dollar's got its own thing, and it's an interest rate differential. Don't forget, if you're trading currencies, there's a massive flow of funds around the world. Basically, you're flowing to US dollar, to euro, whatever. So they're flowing into areas where they expect growth. Now they expect that into the US dollar. So you got zero rates or very low rates where you anticipate US going up in respect to euro. So euro funds are flowing out of the euro, getting rid of the euro because you're going to get no yield for your money in euro terms, but you're going to get it in US. So you buy US, sorry, sell euro, buy US, potentially just pumps it into the market there as well. Okay, it could support the market, but if you're looking at high interest rates, that's where you're putting it back over to the US dollar, because that's probably the best economy at the moment. Forget about the RBA at the moment. We had some bad rates, so it's not really flowing the US dollar. Sorry, Aussie dollar, not flowing to Europe. Uh, Euro, pounds, yes, they're still talking up rate rises soon, but they're still getting knocked around by that US dollar. So look at other things like crude oil, sold down, worried about demand easing, worried about a bit of a sell-off. There's higher supply in crude as well. Supplies come right back online, increased supply, even no demand or same demand, then you should get weight to come into, or prices ease. It's when, it's obviously been supply and demand, more supply, lower prices, weaker supply, higher prices, weak demand, higher prices, high demand, weak prices, basically. And that's what's happening at the moment. There's more supply coming online, expecting OPEC. OPEC are not going to cut, I wouldn't think, because they like to, obviously they're going to manipulate that price as higher as they can. But if demand starts to ease up here, then prices can ease with it. And copper's just sort of linked to the US dollar, but that's been in a big uptrend. We're starting to get some massive distribution up here as well. So we'll see how that goes. Anyway, that's it. We'll look at Facebook. That's just going to look at these quickly. Being the one that driving the actual Nasdaq, Facebook, Microsoft new all-time highs, Amazon just about new all-time highs, Google same, Apple pushed up, Tesla still phenomenal, Netflix. So they're all, they're basically the Nasdaq and essentially the S&P 500. So, well, any questions there? We haven't got too many in. If there's anything you want me to look at, chuck it in the chat now. I'm not going to go through any of my own stocks. No real questions. Keep it short and sharp, but I think got to be careful with at the moment, being careful with the ASX. Obviously, with the more markets get stretched on the upside. In the US, it's all the same at the moment. It's just a bit of concern about COVID, and it's building over in Europe. You got Austria, I think, just went down. They went back into lockdown. There's a few other countries, I can't remember what they are, but a few other countries start to go in, and they've had vaccinations. Then people are going to start to go, well, vaccinations, we're still going to go back into lockdown. If that's what the general consensus might be, whether the US does or doesn't, just the thought of that might start to weigh on indices up at these highs. I think it looks like we're potentially weighing on the ASX at the moment. And yeah, it's coming down slightly. So yeah, I'm just going to look at that. There's the SPY. It's just starting. We had a bit of flush higher. This is, well, we'll go on to the ASX. That was that's the ASX 200. Give it that SPY. So I was actually short a couple of times. I think I was short in here, took something off, went short again, took myself out when it popped through the high, and then went short again as it started to roll. Got a lot of this on the downside, so it's been okay, but then I wasn't watching it. I was watching it in here for potential short again. And then lo and behold, it ripped higher and just squeezed everyone out. So you've got to be wary that, whatever you think, you don't want to be biased to market. You just want to be trading that price action. If it looks like it's going to go short, like here it was looking like a potential, that's kind of the first pullback. If this was going to go again, I would have expected it to have gone, in here. And what I'd be looking for there was, a push down, okay, which it wasn't. It was going sideways, and then you get your lower high, and then you could short into that lower high. But instead, when you get the market sort of flush down and bounces straight back again and goes sideways, you don't want to be going short into that. And lo and behold, we just had a big squeeze. The market squeezed higher, took out all these shorts from previously, squeezed them out, put them back in the sidelines, and essentially I wouldn't be touching this until the close. It seems to be the same sort of trick lately with the ASX, flushing, ramping back up again. Okay, so it's just putting people, and that's, like I said, that's the algos moving traders around, flushing them in, flushing them out. All right, we'll have a look at that. I was just looking at ABB. I was just looking at Grange. Get rid of that. I don't, not a big fan at the moment. I mean, that's not massively, it doesn't look great. But if you go, I was just looking at this weekly, and it's probably a bit clearer on the weekly chart. You can see that 45 level. It's flushed, massive flush into that 45 and held up, bounced straight back off there. Off the daily, that's the flush there, back into that 54, 45 zone. Let me just get the drawing tool up. This is Grange, GRR, GRR. Aye, Captain. It's more, we'll get on some of those. So there we go. That's sort of the support there. We've lifted. Okay, so this leg down's over. We've lifted. We've had a leg down. So it's either from here, you're either going to smash down, you're going to take it out, or you're not, or you're going to start to lift. So I'm kind of looking at that action there. We could start to hold 52, 52 and a half. We're sort of grinding down, but either way, you can see that heavy selling. Buyers stepping back in. The I don't know what do you call it. The gradient of that ascent is kind of low, but the gradient of this descent is kind of easing. You know what I mean? As opposed to this kind of a pullback here. So if that's going to just start to hold at that 52 and a half, that's going to be a confirmed. You've got a low here, double bottom, high, low coming to play in here. If that's the case, then you're kind of looking at that that zone in there to lift up and off there. We've got the market sort of heading down with this leg, easing volume. So it's not a bad sign really. This is Grange. Like I said, if it starts to lift up and through 60, I think that's going to start to trend high. We've got one leg up, and it might start to get a bit of a move on and start to hold up, but I think it's going to obviously depend on others. You know, some of the bigger boys. Go over to BHP. You know, take on miners, BHP roads, etc. Think iron ore, found the bottom. Yeah, no, I mean, I don't look at the iron ore price as much. I'm just looking at this price action. So I think iron ore can start to go up, and we'll see it in this price action. This will lag. BHP, Rio, and all that will start to lag a bit. You'll get these moves, but then they'll get soaked up. So what I'm really looking for is the market to get back above the MAs here, and bouncing on the MAs, I want to see price start to get soaked up. Okay, any selling start to get soaked up above the MAs. At the moment, it's still technically in a downtrend. We've got zones. This is BHP. Just get over here. We could still hold this as a lower high. Technically, we could go through 35 and trade right down to 25. You don't know. So until we start to see it move back up and start to take out some of these lower highs, you know, we've got a lower high at 38.17, another lower high, what was it around here at 39.20. Until it starts to take out these levels, you don't really want a part of it. I mean, if you buy it here, I know a lot of people. This is what I feel with share trading. Share traders are notoriously just everything's a dip. You know, but things could dip more. I mean, you could be right. You could buy BHP and you're probably going to be right. You buy it here, it does go down. Just hold it for longer. And that's the beauty of share trading. You can be a bad trader and still do okay in the long run. I sound really bad, but in the long run. So, but buying on here, I think you can do it better, you know, with regards to your capital. If you start just buying dips all the time, you know, when you get a GFC type of scenario, you know, that's bound to happen again down the track, a pandemic type of scenario. You're buying the dip turns into, oh, geez, it's just smashed you. Okay. And that's not what you want. You don't want to be tying up your capital into some rubbish sort of trades. You want to be buying on the rise. You want to be buying into areas like this. You know, the market's had a bit of a pullback here, rally, pullback, hold above the MAs, starting to lift, hold above the MAs. That's where you want to be buying because we're now in an uptrend again. We've had our longer term. If you go to the weekly, you've had the pullback here, and this is, I think, the area we're looking at, and it's back above the MAs on the weekly, had a good flush, we've had expansion, contraction, we're going back into expansion. So if you're looking down on the daily, you've got expansion, contraction, back into expansion. That's where you want to buy into expansion. At the moment, we're just either going to go sideways, we could be starting to build a base, but we're not into expansion at all until we start getting above the MAs. And to me, it's still some lower highs coming to play. If you go over to Rio's probably going to same sort of scenario. Rio is still technically heading south. Yeah, it's extended. Look at the momentum. So you look at the momentum saying, oh, it's momentum down is running out. Okay, not so much that it's time to buy just because momentum's easing. Momentum, like on an uptrend, momentum can be overextended and stay overextended. The market can keep going up. You have these little pullbacks of momentum, market goes sideways, and then when momentum picks up again, it rallies. You could have this, the market goes sideways, momentum starts coming back to the zero line. Obviously, you start getting some buying momentum, but the price is actually going sideways and it can get hit again. You just don't know what's going to happen. So there's a lot of room to move on the upside, obviously. With Rio, you had a big leg down off 140, pushed all the way down to 90. It's really just looking at this daily saying you can see momentum is actually on the rise. So that selling momentum's eased, but price is still going down on the daily. So I'm not inclined to be buying this at all. I'd rather give up some profits to be get on the right side of the market, buying off your MAs on the daily chart when either your weekly is heading sideways or starting to lift as well. But I think buying when you're back above the MAs, average is obviously up. That's where you want to buy into expansion and see how it goes. Go to FMG. FMG, that's, to me, is looking a little bit better. It's kind of lifted a bit. Looking at that weekly, not exactly lifted as in double top here, big flush. So that flush to 140, last time I was trading around there was back in June last year. So a year's worth of rally is sort of taken out in about a month or so. Smash down, holding that one $14 level. It's just whether we can hold this as a higher low, and then if it starts to rise from here, then you're sort of sitting on back on top of the MAs as well. Yeah, I actually don't mind FMG. It's kind of showing, you've had a sell-off, consolidation sideways. You got lower highs pressuring in, but you can see it's quite clear that through, this zone around 14, just above and below, it's been soaked up, and now we've got this expansionary candle up on the 11th of November, popped up, sort of grinding its way back into the MAs. So if it can hold up off that 15 area there, it could get a bit of a lift. You'll eventually get the MAs crossing up and then see if it can actually start to lift again and make back some of these losses. ABB. We've got Aussie Broadband. That's been lifted, so that's pretty good. It's headed sideways through here. So that, from a, let's just get rid of this. From a technical perspective, you've had a run up here, and you could see, this is what I'm talking about with the price action and the MACD and the momentum. Because we're only really ever trying to trade momentum. Well, that's my ideal scenario anyway. Momentum up here, it's got a pullback. Essentially the market goes sideways. That's not momentum. You can see the momentum sort of drifting above and below zero. Then we start to lift again. You can see clearly it's kicked on. This is where I'd take, I'd love to have taken action. I don't know if we said anything. This is a while ago. Can't remember. It's lifted. So this is where I like, because you got consolidation sideways. Yeah, it's lifted. I don't see a setup here. If you were buying these kind of setups through on a daily candle, you would have bought in here. You would have bought, multiple times. To me, there was nothing there until we got this expansionary candle up, or expansionary leg up, bit of a pullback, consolidated sideways as momentum was sort of easing as well, lack of volume, and then took off again. So that's where you'd be wanting to enter. You know where your risk is. You've got 2, 3 to 1. And don't forget on moves like that, if you're trading the CFD, you can trade your stock, obviously. But if you're trading CFDs, you can use more leverage because you can have a tighter stop because you're trading off the price action. So even if you miss this kind of a first leg up, when you're trading like that and you're trading your CFDs and you're using more leverage, you can get a good bang for your buck anyway. I mean, that distance there, so you bought that break, your stop's below, you've got 2 to 1 sort of up at these highs, 1 to 1 about there, you're back to 2 to 1, so maybe 3 to 1 now if you're still holding. What we're seeing through here is the same sort of thing. We've got momentum when we got to these highs. Just actually I'll get rid of all that. All right, so we've had price consolidate through here. Okay, when we're up at these highs, you can see momentum starting to ease. Momentum's come all the way back down, back to the zero line, but price has been going sideways. So that's a good sign of strength. So when you get momentum start to lift again, buys start to stack up. At here, buyers are just taking the foot off the gas. sellers are coming in, but it's still getting soaked up. So if you're a market that's going sideways when the momentum's coming off, for me, that's be prepared for another leg up. Okay, and that's what we got. We've got this little pop up there. So ideally, if we can have a bit of a pullback to the, well, that's pretty, you don't want that. So we had a bit of a ramp up and out of this area, get a bit of a pullback to the MAs, bit fairly deep, say 525 or so, and then see we start to lift again, then it could be a buy and see if we get this expansionary leg up again. We get another good leg. Okay, so I think that's it's on the way up. It's showing some good signs, and it's got some good volume. Look at that volume that's come in on that candle there, on that expansionary candle when it pumped up, took out some stops. Now, if it was going to just take a bit of a stop hunt and it wasn't intent on going higher, you probably would have found this little move here. Well, you wouldn't have got, I wouldn't have expected you got a market that's going sideways. It would have sort of gone up and pulled back because that weakness. And then if you trade through the highs and it can't stick it, then you've got a bit of a problem that you've got some sort of double top and then you look for your lower high, either to get out or go short. But the fact that we've gone up and we're sort of holding after that consolidation sideways is a really good sign. And it's got some good volume. Everything's looking good at the moment, especially if you're long. Especially if you're long from in here, it'd be great. ABB, that was done. Finish off with APX. ADV, you're on break again, mate. Appen. The weekly's not showing me anything at the moment. I'm just seeing that momentum's starting to lift, but it could easily just go sideways and consolidate. And it's the reverse of what we said. Weakness come in. It's obviously pushed it all the way from $40 down to $10. You know, these highs, weakness coming, thumped it down. Big clear out of longer term buys. It hasn't consolidated, so if you're going to go long, you want to see this consolidate. You want to see it consolidate. MAs flatten out. The MAs, EMAs, I use the exponentials, at 20 and a 50. If they can flatten out, it means that the market has found a base at the very least. At the moment, they're not flat. The lower highs are still in play. Market's still technically going down on the weekly. It's just that momentum's probably running out of steam to the downside. It's whether or not we can start to lift from here. Now, the daily chart, much the same. We are sitting probably for one of the first times. We're sitting back on the MAs now. If you look at that, you go, that's great. We've done that before and got smashed up here. Same sort of scenario, popped up, that was looking okay. And that was the start of a sell-off. Now, the difference between this and this, we've already come off quite a lot. Like I said, so this is something that will get a bit of legs, but this kind of action, most recent action, just getting on that, this recent action is not too crash hot. Okay, I don't like the fact that it's all down up until this candle, and then we've lifted. Really, we pull back to the MAs, and we're trying to lift again. I don't see a lot of strength. I would rather see, you know, another flush, a retest of into this level, at least a deeper pullback. This is not a really pullback. This is kind of all one leg. This is not much of a pullback. You know, we're not really testing the resolve of buyers just yet. Okay, we're sort of heading sideways, heading down, popped up a bit. We could do this like we did before, popping up and then bang, keep grinding down. So for me, I'd rather just see a bit of a test in the lows. I'd rather see this, you know, this level be defended, any push down to there through, say 10, be soaked up, and then I think that's where it could start to get a bit of run onto the upside. So yeah, we'll just keep an eye on that one. ADV, you can see this is probably what I'd be looking for on APX there, John. It's kind of, you can see that the market's, okay, it's pressed higher, big sell-off, got smashed, bounced back, still more selling to come. This move down, if you're looking at in terms of strength, that move down is quite strong. Basically, no buyers standing in the way for whatever reason. They started to come back in, and then once they got to about here, sellers started to pile in again, buyers stepped aside. But that move is not as savage as the earlier move. And as we're having more sell-offs, the pressure of selling is easing. You can see that by, we'll draw that up. You can see that by the gradient. I think I'm using the right term. That's quite steep. It's getting less steep, less steep. So you can see that as we're going, we're starting to be buoyed. Does that make sense? So you can see we're doing this. We're sort of curving. Okay, so we're starting to flatten out here, which is good. So Now that we've got potential low, we did something, we popped up, pull back, popped up, come back, took out this low, a deeper, one started to hold and we started to lift there again. So that to me is not bad. It's not really showing we're in an uptrend just yet. It's more sideways action. If we can start to lift, you want to see it start to lift up through, what's that, 1 point, better check that out, 1.7 cents, thereabouts. Start to lift up there, it might start to get a bit of a run on. Okay, but for now, this little rally up here is nothing to get too excited about. We went sideways for a few days, now we're back down again. Okay, so there is still some lingering selling. We could be just ranging for now. If we stay going sideways, as long as this level doesn't break, then it could start to build again. Because you don't want to be buying here thinking, okay, we're heading higher, and it does nothing for years. I mean, I've got some real, for lack of a better word, crappy little stocks. Not a lot into them, but they're just going nowhere. And that was me trying to buy off fundamentals that I probably didn't understand very well. And I got caught in a couple of pumps, that pumped up, looking good, got caught, got sold off, good news flow, and it's still getting sold down. So they're just essentially doing nothing. So they could be doing nothing for a year or two before they start to lift because they're only small. So I'm assuming this is a 26 million market cap. It's small. So this could do nothing. It could go sideways for a year or two. You don't know. So if it's got good news flow, if they're expecting some good news flow, then you should start to see it in the price. And when you see it in the price, then it's worth jumping in and buying. Anyway, that's pretty much it. We'll call it a day there. If there's anything else, quickly chuck it in. Otherwise, I'll give you a minute or so. Otherwise, we'll just call it a day and finish up there. It's a good old ASX 200. We're starting to lift back off this breakout area here. Not looking too bad. I'm not going to trade that, but see that's just been, let's just delete that. Put in a little channel, colorful channel. Lifting up there, not too bad. What else have we got there? Japan's lifting. What's Hong Kong doing? Probably annoying people. So the short didn't work on the Hang Seng either. It flushed the lows and bounced straight back again. So even the Hang Seng's turned into a bit of a choppy mess at the moment. I'm just going to check something there. That was on that 5-minute candle too. So if you did go short, it might have been a bit too late to go short through the lows. So you might have just done nothing today on the Hang Seng, but it was on that 5th minute. It went through and then bounced back the very next minute. It didn't quite, we missed out on the target by about 5 to 10 points. So 90 down to 65. So yeah, about 5 or 6 points. So it's still got down there, still flushed the lows, but just not enough. And that's probably the problem with the strategy. Just at the moment, you've got to be wary that if the volatility comes out of the market a bit, you might have to just ease off from the target and the stops. Go for 20 on the Hang Seng as opposed to 30. The DAX go for 9.8 instead of 10. The Dow's is still working really good. Didn't work on Friday night, but we stuck to our rules. Didn't trade long. And I think a couple of minutes before, it just ramped up. It went sideways and then rolled over. So it didn't go near the lows or the highs within the first 5 to 10 minutes. All right, I'll call it a day there, guys. Thanks for joining me. And if you do like what you hear, it'd be great if you can leave us a like and follow us on Facebook. YouTube. Help spread the word a bit. Otherwise, have a good week. And the live trading, I'll be back in on Wednesday. We'll just talk through some of the opens and some markets I'll be looking at and see how we go. All right, guys, enjoy and speak to you again soon.